Hey guys, today is Friday and welcome to a quick trade breakdown. Actually, I was not planning on trading today once again. Still, actually, I did not expect that we have like such a clean delivery within our AM session. Also, like coming from a bank holiday from yesterday. Still, I basically um, was just basically taking a look at the charts and yeah, it just looked really clean. So decided to basically to trade today. And yeah, we'll start on the daily chart as always, and then we will break it down. So actually quite a really low volume day today as expected. So like it's Friday and we are coming off a yeah, bank holiday, but wait, let me do this right here. So um, what I was looking at is the daily wick right here. So the daily buy side liquidity and also yeah, still the inefficiency right here, and also kind of the quadrants of our daily yeah, or yesterday's daily wick. Yeah, so right here we have our daily quadrants of today's or not of today's, of yesterday's daily wick. So with that we can drop to a 1 hour chart. That's basically what you can see right here. And with that we drop to a 50-minute chart. So right here it's getting more interesting. So what we can see right here is the fact that we basically swept London highs definitely within here. Also swept Asia highs and also swept daily buy side liquidity right here within our Asian session. So with New York Open Kill Zone, we traded higher, we scrapped Asia highs. Then also with the AM session, we swept the New York Open Kill Zone buy side liquidity, and from there on we sold off, swept not even the New York Open Kill Zone sell liquidity, but also the London lows, and from there on we traded higher. But now we are basically trading within the range right here, so also within the quadrants of our wick, daily wick. But as you can see right here, because this the basically the level of the quadrants is not really external liquidity, so therefore we'll just delete it because we are just trading yeah, within it, and it's more like confusing. So before we drop lower, I want to show you as always regular trading hours. So because we have such a low volume, we actually had only a new opening range gap of 37 handles. So therefore we can basically ignore it because it is smaller than yeah, 40 handles. But what I want to basically really take a look on is the 5-minute chart right here, because what we can see right here is that with opening up right here and trading higher, we did not no damage to the sell liquidity. So the wick basically failed to take out the low right here. So therefore there's no sweep of sell liquidity. Therefore we traded lower, swept the engineered sell liquidity right here, swept the sell liquidity right here, and also traded perfectly to the 5-minute order block right here. And from there on we traded higher. So just keep in mind that we want to see first a continuation to the, not a continuation, but a reversal to the downside, and then basically a continuation with the trend to the upside. I also want to take a look on ES today, because ES was kind of different. So right here S&P was yeah, trading higher basically with the opening. I don't know if that's even correct. Let me check again. So yeah, with 930, NQ scrapped the New York Open Kill Zone, and yes, basically failed to do that. So therefore we had a SMT basically in play within the opening. So therefore we actually do not really have a market maker buy model being in play on ES, and especially because ES was trading at all-time highs. We definitely first want to see a sweep of sell liquidity in order to follow the trend higher. We don't really want to take any shorts on ES, but definitely we want to see a sweep of yeah, sell liquidity, and from there on we can trade basically higher. And what's also really interesting is the fact that we have the basically the session lows. So let's just do it like that. So the New York open kill zone sell liquidity right here is in close up to, how you say it, in close proximity, I think you can say it, to London lows. So therefore that's actually quite a strong draw for price. So let's go now, drop to a 1 minute chart on NQ, and I will show you more executions. So what we can see right here is, as I already mentioned, with the opening we traded lower, swapped New York open kill zone, sell liquidity, but on the 5 minute chart we left a huge 5 minute inefficiency. So therefore we don't want to chase price higher, especially because we have a high resistance delivery higher, also like a relatively high volume or a volatility basically in compared to basically how we delivered before. But with the with approaching the 10 a.m. macro, we actually got a really nice reversal right here. So we had SMT with VS at the highs. We traded lower, close below the breaker, traded into it, and from there on we sold off. I actually did not take the trade right on there, so basically from the breaker, because I was a bit too. I wanted to be a bit more patient, especially because we scrapped already the New York open kill zone sell liquidity, and that's always a really strong draw. And from basically with that in mind, right here a market maker bar model could be in play, but because we scrapped the New York open kill zone sell liquidity first, and then we scrapped the New York open kill zone buy sell liquidity, with basically reaching the New York open kill zone buy sell liquidity, we kind of complete the market maker buy model, and then we trade lower, align basically with ES, which can target London lows, which are close to the New York open kill zone sell liquidity, and we are also trading aligned with regular trading hours, because as I showed you before, on regular trading hours we want to see that we reach for sell liquidity first before we trade higher, and also like the 5 minute order block right here. So therefore I entered right here short, because we also have a institutional order flow entry drill. I really had a unlucky or an unfortunate entry right here, but yeah, it's just what it is. Could have been better, I have to admit, but it's really fast or really high volatile trading in here. Still, I'm content with the entry right here. From there we traded higher into the suspension block. We could not close above it, and then sold off into the engineered sell liquidity right here, and also into London lows. So actually a really clean low resistance delivery. I took my first partial right here and my second partial right here, and then basically we reversed. But right here has not reached the London lows, so therefore I was still expecting lower prices. And then right here basically SMT was in play, so ES finally also like reached the London lows, and then we had also a really clean SMT down here, and from there then we displaced higher, and that was basically right here my second trade. So I entered right here only with 2 contracts, I think, but I got stopped right here because I was trailing once again my stop way too tight. I had it below the low of the wick right here, of the candle right here, but in that case that's definitely too aggressive, because we are just only trading near consequent encroachment, so therefore we actually kind of still have it, or we still have to place it below consequent encroachment, or within definitely the breakaway gap, because we do not expect NQ to trade back to the balanced price range right here, because we traded lower, traded higher, also have a breaker right here, so that's actually a really protected inefficiency right here. So therefore we expect, because it's also like balance, a balanced price range, we expect that the gap right here will stay open. I basically realized my mistake, but I also was aware of the fact that we once again had SMT right here at the lows, so that was a valid entry right here. So I entered once again and also I think I added one contract right here within our London close macro. Why? Because we had once again SMT, so that's really clean. ES was taking out the low right here, therefore that's our short-term run and stops. We are still expecting higher prices, especially trading into the 5-minute and 1-minute favor gap right here, and also to take out the buy side liquidity right here. From there, or therefore I expected higher prices within the London close macro. I added one last one last contract. I think now I was long with I think 4 contracts. I took one off right here, one off right here, and also like one off right here, because it definitely, and you definitely showed me that we are not really able to trade higher. Therefore I took one off right here, trailed my stop to break even, and then I got stopped right here. So really clean delivery, as I already mentioned, to the downside, then to the upside. What I really like is the fact that we reached the upper quadrant of our price range as well. That's what we want to expect for a market maker buy model. So I'm really content with today's trading day. The only mistake I made was basically once again trailing my stop too tight based on my P&L, not on price action. So definitely that's a point which has to get better. Also because with re-entering, we are also like trailing our position way higher than I entered before right here. So that was way lower. Therefore, we could have already made more with just being placed a bit lower. But I also like about the trade the fact that we had basically a short-term run on stops 3 times. So what I mean by that is if I delete the SMT for a second right here, you can see that we basically took out the previous low 3 times, actually 4 times, but 3 times, right here, and right here. And also like with the SMT being in play right here, and then followed by a huge displacement to the upside. That's just A plus setup, perfect in that case. It's a bit unfortunate, or not unfortunate. It's would have been nice to see that we could have delivered a bit more low resistance and also like reach for external buy side liquidity, but that's just it. So we cannot really expect something like that every day, especially because it's Friday. We have a low volume day. We are coming off a bank holiday, and therefore we always have to take partials, and that was perfectly executed today. I'm really content with that. And also maybe just a quick look on my Notion chart. So it's amazing to see. So December I made 1,041 US dollar, so on my paper trading account, and that's definitely a lot for me. Maybe let's also like drop back to the weekly outlook. Wait, so that's this week. So 379 US dollars. We definitely mitigated or recouped the loss from last week. But that's just really amazing. So the 4 trades I took this week, 1 break even and 3 winners. Really amazing week. I don't really know how much I will trade next week, because with basically approaching New Year, it's definitely getting a bit more difficult. But I was expecting actually a quite difficult price action for today as well. And as you see, we had a really clean delivery day, so you kind of not really know it. You just have to adapt to what you get, basically what NQ is delivering, and then you have to decide basically if you want to risk your money or if you want to protect it. And that's what we always have to do. We always have to protect our capital, so that's the most important point. It's not about making money, but about basically protecting your money. So with that, basically I will wrap it up, and I think see you soon, guys.